Did you ever drink like Dom Perignon or all this? Like, never had enough. Like, would you spend that?
I don't even think I've seen a bottle. Hey everybody, it's Hussein Kabani and
Steve Zalunardo.
and this is East Meets West podcast.
Awesome. Welcome to the chat, guys. We got a few topics coming up
We got
today.
some stuff, yeah?
Yeah, I think we want to get into what analytics you're talking about.
A little
market
bit, yeah,
analytics. I
yeah.
think that's super important,
Yeah.
just to even for subscribership or even for people listening.
Yeah.
And I want to get into price adjustments with properties, just how crucial they are into selling properties, especially in today's market, right?
Yeah, for sure.
So yeah, cool, buddy. So how was your week?
Week has been good. We had a couple of buyers that we started working with, took them out. Actually, over the weekend, took out 2 sets of buyers, one in the morning, one in the afternoon. Ended up writing offers for
Nice.
both of them in the evening, so that worked out really well. It was one so nothing too crazy, but like I had a crazy story that happened. So one of the houses that we were making an offer on, so the listing agent is related to one of the sellers. They're sisters. So yeah. So I just find it hilarious. So basically what happens is that I make an offer on this property. Like it was, I think I went in 3% lower than the asking price.
Sure.
3%. I thought it was pretty reasonable still. Like
Yeah, of course.
it's an opening offer. So we went in 3% lower than the asking price. And keep in mind, like I said, the one of the sellers is related to the listing agent. They're sisters. So I submit this offer at like 11:30. The listing agent confirms they're receiving it and whatever else like that. The next day, around like 11 a.m., I get a phone call. I get a phone call from the listing agent and the seller's father.
Nice.
Yeah, I
The
get a
boss.
call from the father. Yeah, and
The
then he's
jefe.
like, yeah, he introduces himself, and then he's like, the seller is my daughter, and the listing agent is my daughter as well. So they're both my daughters. I was like, oh, that's great. Keep it in the family. That's awesome. I like that. He's like, yeah, but he's like, you just sold this other house down the street for a certain amount, and he's just like, if you're gonna make an offer, make a reasonable offer. I was like, are you kidding me, man? And
How
so
did you approach him?
like I just said, like, look, sir, I respect what you're
appreciate where you're
saying.
coming
Yeah,
from, yeah.
like I respect what you're saying, but I said, like, you got to keep in mind, like, and I kind of went through the differences. Like, we sold a 2-bedroom, they have a 3-bedroom, and there's other variances and stuff like that. I kind of went through a basics of it. He doesn't want to listen to it. He doesn't care. And then I just kind of said, like, you got to also understand, like, this is a negotiation, right? Like, this is an opening offer. I didn't give you an unfair price as an opening offer. Like,
Yeah.
there's a deal to be had here. And he just hung up on me.
No.
Yeah, he just hung up on me. He didn't want to have.
nice guy, eh?
Yeah, he didn't want to hear anything I
What
had to
did
say.
what did you do with your offer?
You know what? I was a bit of a prick after that, so I messaged the listing agent and I just said, "Hey, your dad just called me to negotiate this offer." I was about to say, and I stopped myself, but I was going to say, "Do you want me to negotiate with you or your father? You just let me know who I should be talking to. I don't know."
What did she say?
Yeah, and then she just called me and just being like. She was, I don't know how
Apologetic?
many sales she's done. No, not apologetic
Nothing.
at all. No, not
What
at all.
nationality? Not that it matters, but just
Yeah,
curious.
they're Indian.
Indian, yeah.
Yeah, so they, not apologetic at all. Just defended the position and whatever else like that. Just brushed it off like it was okay. Yeah, but it's okay. I
you
just
get
found
the
it
deal done?
hilarious. Yeah.
Yeah?
We got
Oh,
the
fair
deal done.
enough.
Yeah, we got the deal done.
Just a little.
Like, yeah, we wanted the house. Like, dude, I walked into the house. Like, now that it's like we're in a conditional offer and we have the ball, I walked into the house and I was like, dude, you got to buy this house.
we killed it.
Yeah, no. I told him like full list price. I said, you have to buy this house because I said, whatever we're looking at right now, there's nothing that's going to be like this. I said, these guys prematurely dropped the price. They prematurely dropped the price on this property. And I said, you should be buying this house now at
And they
full
just
price.
scooped
It's
it up.
okay. Yeah. And then so they actually did counter back at full price. And my client's like, yes, I will take it.
Just took it all, like, yeah.
Yeah,
Smart.
when I walked in, like, it's my area. It's like the area that I work in. So as soon as I saw the listing come up at that number, I was just like, dude, like,
What was
this
the
is
price then?
stupid. We're at 570,
Yeah.
and then it dropped to 20 grand, like very prematurely, very
Like
prematurely.
5%,
Yeah.
4 to 5%.
Yeah, so it was at 550 then. I was like, dude,
4%.
like
Was it 4? 20%? 3.5? 4?
something like that.
Yeah.
But so we just basically, I just told him, you got to take this freaking house, man.
Smart.
Yeah. So they
Lock it
did.
up. Yeah, very good.
So it's good.
So everyone's happy. Dad's happy too then.
Yeah, I guess so.
Yeah, full price. See,
But
listen to me. See Hussein, when I called him,
you know what?
To me.
But you know, we even talk about like getting cocky about it or arrogant and letting your ego take it. So it happened to me in a flash of a minute. So when I basically got the counter offer back, I was just thinking like, you know what? Screw these people. Like, I just want to like kind of grind it to them. And I said, hold on a minute, dude.
It's
like,
not going to help the situation.
Yeah, it's not going to help the situation. Like, you know, my buyers want this property and I think it's an awesome property at a great price for them. So I said, you know what? Let's not be an ass. Let's
just do the deal.
Get the deal done.
So enough.
Yeah, that was never happened to me ever before that someone listing agent's father or another agent's father or parent called me to negotiate, but
it's okay, fair enough. Still got it done.
Yeah. It was cool. I don't mind.
No.
I don't mind. I don't know if Rico would mind, but I didn't mind.
Probably not.
Yeah, you don't think
so? It works. It works.
Yeah, it's okay, man. I'm good with it.
Keep it in the family.
Yeah, it's all good. Yeah, man. That was my interesting story.
Very good, man.
Yeah.
Yeah, so myself, it was a good week. Like, we took 4 listings, put them up simultaneously, and then going into the weekend, I sold 2 of my rental properties, which is awesome.
Yeah.
I mentioned it, I think, on Insta stories, even on my Insta page. So, good profit. Like, we're going to get a 290% return on our capital, initial capital.
And sorry, how long was that?
This is 4 years.
That's amazing,
and
man.
We bought
Where do you get that?
I mean, that's what I'm saying, right? So naturally, we sold this property at peak. So basically, now we need about $30,000 to $40,000 to renovate it. And then even the rent is much lower than market value. So there's a few things going on with that. 2020, I feel like...
And sorry, I don't want to cut you off. But the thing is, what you just mentioned, I think that's important to let people know. So the rent is way lower than market value. But you can't... Like, for example, if you were getting... Sorry, how much were you getting in rent for that property?
So I'm getting $1,700 now.
And how much could you have rented it for?
Right now.
Yeah, see, the thing is, you can't just go and say, hey, market rent is this. I'm going to jack it up to this number. You can't even do it. Yeah, exactly. But actually, against the Landlord-Tenant Act, right? Like, you can only go up, what was it this year?
1.8%.
Exactly.
So going back to that, like, so if you just a side note here, they were just talking now that a lot of investors are unloading properties right now, right? A lot of investors, like myself, and it just fell in line. I never like planned it. It's time. We're peaked. I don't see any more value in these properties. It's time to cash out and get ready to buy something else in 2020 or later this year. So they're talking about a lot of people getting, not kicked out, but they have to leave the residence because they're being sold and whatnot. And now they're faced with going into the market with higher rents. It's a huge problem.
Yeah, it's going to be a problem.
So they're blaming the current government like huge right now.
But you think about even the extra $300 in cash flow, like that would have been pretty significant.
1,000%. Yes, that's like $4,000 a year, let's call it.
Yeah, but that's also carrying somewhere around the neighborhood of a $60,000 or $70,000 mortgage, right? Yeah, so that's huge. Yeah.
And we're not doing it to kick them out and re-rent
no,
it. We're not
for
doing
sure
anything,
not. But the business decision would be maybe a little bit different. Not maybe in your situation, but in other people's situation, right? Like the business decision could be a little bit different because you may be able to get that extra cash flow and refinance it and pull the money out and still continue. Your decision is different because you're going to do something different.
Yeah, we're gonna recapitalize.
But there are other people that may consider keeping it if they were able to get up to market rent.
Yeah. Yeah, the good thing is when you bought these properties naturally, so why did the rent increase so much? Why? Because people were buying these properties at such high prices in 16, 17. Naturally, they had to set high rental prices in order to offset the mortgages. When I bought this thing, it was a joke, right?
Yeah.
So naturally, even at $1,700 a month, I was already still passive $400 per month.
That's amazing.
So business decision, going back to that, do you boot out these clients or tenants and then try to get more money, or do you just hold them in there and just increase it gradually? Because you know what, they're good tenants. They've been there 4 years already. So
you obviously can't just go in and raise the rent from 17 to 2. Like it's just against the Landlord-Tenant Act. So you're not going to get away with it either.
I missed 1 year. Maybe
rent
this
increase?
is my second year. This will be my second year I didn't do the rent increase. So first year I gave them like a leniency just to kind of get used to the house. The second year I did a rent increase. Third year I skipped, and this year I would have increased it. So let's just say I increased every year, it'd probably be about 18, 20, less, something like that.
Yeah.
But just still below market value, right?
No, that's good.
Yeah.
Sorry to get you sidetracked.
Yeah, no, that's fine. So 290% return on capital initially invested, which is awesome. 325,000 in equity, and now naturally just to move this money out and just go back in the market.
Buy the hotel.
Yeah, buy the hotel. Yeah, four greenhouses to one hotel. Yeah. Now naturally, what I want to get into is a house with a wide enough lot to subdivide. With a bungalow, I'm going to subdivide the units and just create a legal duplex, like get it like fire safety, everything to code, and just have a legal duplex. So 2 doors. So I want to buy 2 of these properties, so 4 doors. So basically, I'll have 2 doors turning into 4 doors now, and I should be doing net per month $1,700 with combined properties.
Yeah.
So it's like $18,000 net per annum after expenses. So my intentions is naturally 5 to 7 years to keep this going. So that's what, about 80, almost 100K, I would imagine. Let's call it like coming in like passive income. And one of the properties there, tear it down, subdivide it, and start to build. Right. So it's going to be an easy transition.
Yeah, that's
the
awesome.
The property's there. It's basically paying me to own it.
Yeah.
And then naturally, I'm just going to cut it in half and start even with that $100,000, I can start now the process.
The process
subdivide
to get it going.
And then get the trades ready, engineering, and going. So
awesome.
Planting seeds, right? You talk to so many people with great wealth, and I'll tell you the story this morning when I was talking about that guy from the gym today. It just reminds us how little we are, honestly. We do really well in real estate. We're top of our game, let's call it, in this industry. But in the grand scope of things, when you look outside, like big business owners where there's 500, 1,000 employees, right? And you know what? They're not stressed. And, and I'm limited to the amount of employees that I have, and it's just like, it's a process, right?
Yeah.
It's something to get used to.
But like you said, it's planting seeds. Yeah.
Yeah, plant the seeds. So this is the next step. So now, naturally, when you do these builds, you get more money. I can reinvest it again and just keep cycling, right?
Yeah. Because I heard an interesting quote this morning too. It was basically like, if you continue to do the same thing every day, the same thing over and over again, you're basically living in the past. Right? You're basically living in the past.
Holy shit, that's good.
Yeah, it was a good point. Yeah, man, plant those seeds.
Move forward. But where's a quote I read this morning? It was something about leaders. It says something that leaders don't lead; they're chosen by followers.
Yeah.
Isn't that cool?
I actually, it's funny. Funny enough, I read something almost similar to that. But it went along the lines of, to be a great leader, you have to be a good follower. Yeah.
Fair enough.
But I don't know. See, maybe that's where my problem with leading is. I'm not a great follower. I never took instructions well, man. I just kind of did my own thing.
Oh, absolutely. Yeah. But then people will naturally follow you because of the energy, right?
Yeah.
So look at those. Remember those little posters I bought for my kids?
Yeah.
Those little, not posters, they're portraits. But there was one that shows, it says something about boss, and it shows like the guy in a chariot and people are like pulling him.
Yeah.
And then it says leader, and it's just like the boss is in the front pulling like the whole chain of people with it. It's pretty cool.
Yeah.
Yeah. We should put them all here.
Yeah, we should, man. Just can't afford them.
Awesome. So what you got into analytics?
Yeah. So I was doing a little bit of a quarter update yesterday. So I found some interesting stuff that I wanted to share. It's kind of what you were talking about already. Basically, like the market being flat. So when we were looking at in 2018, when we were looking at the numbers, comparing it back to 17, it looked devastating. Even like if we looked at Toronto Real Estate Board throughout TREB, like the number of units from 17 to 18 were down like 35%. So that's somewhere in the neighborhood of like, I think it was like 8,200 or 8,500 units were down in terms of sales. But more interestingly enough, like now that we look at 18 to 19 and we compare it, everything is almost flat. Like we see small changes, like I would say within like the 5 to 7% range, negative, usually negative, but there are some small spots where there's positive. So instead of getting into all of the details overall, like almost every single thing is flat. Like it's a flat market when we look at it from last year. Like I mean, there are some gains in certain sections and whatever. But not much. The other thing I was even showing you this morning is that, so I just looked at TREB, Toronto, Durham in general, and then I broke down Pickering Ajax. Pickering Ajax, because that's kind of where I'm at and where I focus on. But with even the Pickering number, if I looked at, like I love looking at this because the thing is, this is what I was telling people. You know what I mean? Like there was so many areas in the GTA that got affected so much, and I should have ran the York Region number, but but the thing is that because we would have saw the impact over there, do you know what I mean? In terms of like the pricing coming down really heavily. So when I looked at the average price in Pickering, particularly from 2017 and 18, like where other markets had taken a big hit. Pickering is such a growing market that it was actually up almost 1% in average price.
Price range too, right?
For sure, but that also backs up that there is room, a lot of growth. You know what I mean? And think about it. Like it wasn't that Pickering or Ajax was sheltered from the rate of increase on the properties. They just didn't depreciate that much when the market came down. Yeah. So it was able to hold its own. So I was very happy to see that because it's a lot of stuff I was preaching for the last few years, that there's such a room for growth over here, and now the numbers are actually materializing, and you can see it.
This East End is you talk to all these builder developers, like this is where they're focusing, and number one they say is affordability.
Yeah.
If you want to live in a residential area, raise a family, and you only have 700,000 to spend, where do you go?
Yeah.
And it's not just Pickering; it's even further, like Ajax.
Yeah, but Pickering is getting expensive now. Like Pickering is expensive.
The hamlet of this community, like the East End.
Yeah.
Where the prices, you're starting to see like $1.5 million, $2 million houses,
and now you're seeing more commonly traded. Like we never used to see commonly traded at $2 million. I mean, there's not a ton of properties like that, and they are not cookie cutters. I know in certain areas, maybe even where you kind of trade, you could see a cookie cutter for $2 million, right?
Yeah, $2 to $3 million bucks.
But here, it's like something like here that would sell for $2 million. You'd probably buy it there for $3.5 or $4 million.
Yeah,
right.
Sure,
so,
sure.
But you got to pay the property tax here.
Yes.
Yeah.
But we got them here in Kleinburg's pretty extensive.
Is it?
Like one area on the boulevard in Kleinburg, it's some of the people pay about $35,000.
Oh my goodness! Yeah, that's insane.
Yeah.
That's insane. Yeah, but without digging into like all the boring details of it, like the overall theme here is that, you know, like I said, what you were saying, it's flat.
It's flat.
It's a good market.
17 was a fable year naturally, so 16 was a continuation on to 18. It's
what we were talking about. Yeah,
it was a leap year.
like what we said, right? Like I think if we, and I'm going to do it now just for fun, later. So what I'm going to do is I'm going to add like 16 to the mix, 2016, and I'm going to eliminate 17 just to back up our theory, and we'll talk about it. But it'll go even.
I did a video beginning of 18.
Yeah.
So, and just based on this, right? And it shows, it's basically a continuation, and it shows like a 3 to 8% like increase in value from 16 to 18.
Yeah.
So 17 went up and it went flat.
Yeah.
It was a fable year. It was a leap year.
Yeah.
Yeah.
No, it's good, man. The only other thing I can point out is that obviously the days on market have changed, but like other than that, it's not even increased by much. But
what's your increase?
Like, look, something like Pickering, right? So in Pickering in 2017, the average selling was like 7 days. It went up to 17 days. Now we're at 21 days. Like, big deal. Yeah, it's when you look at the percentage, it's like, oh, it went up by 20%, but it's like 4 days.
Hey, remember, and I got into business in 2010. Okay, I sold, I think it was, 3 properties from August when I got into business to January to December. So I sold 3 properties, right? And one of those was a listing. And I remember like selling in 10 days back then.
Yeah.
Wow, you had to tell the world.
Yeah.
It was like you sold in 10 days, tell the world.
Yeah.
Knock on all the doors in the street and tell them you sold that house in 10 days. It was like record breaking, right? And now again, this is like you sell in 10 days, 2 weeks, under 30 days. It's like, it's pretty decent right in today's market. It's all relative, right?
Yeah.
We're just repeating the past.
It's okay.
Yeah.
But yeah, everything's good.
What do you think of 2020 though?
2020. I don't know, man. Like,
do you want to get into that?
Yeah, I don't mind actually. I think that it depends on who you are and what you're doing. I think it always comes back to that, right?
Yeah.
Like, what's your intention of purchasing real estate?
Yeah.
If you're purchasing a family home, then I don't think you should really care that much.
Irrelevant.
Yeah, I don't think you should care that much. If you're an investor, I think definitely like you gotta. And it depends on, I guess, what type of investor you are. Are you looking for a return in 2-3 years? Are you looking, to play the long game on this thing? If you're looking for a return in 2 or 3 years, for the most part, unless you're going to do something like what you're planning on doing, buying one property that's wide enough, making 2 legal, like making it into a duplex, and then have the ability to split it in the future. Yeah, 100%. I think that's worth it. If you're going to be in the real estate investing game and purchase a property for 2-3 years and think you're going to flip it and make a huge profit on it, just buy a townhouse and blah blah blah. I don't think that's going to be a good idea for you. Yeah, if you're going to plan on holding it for 5-10 years, like I say, I think it's a great idea. I think it's awesome. But like 2-3 years, I don't think so, dude.
Yeah, I agree. This is why I'm unloading my properties now. To me, that they've peaked in value, so it's like naturally it's time to go. You have to make a decision at this point. I came to the crossroads where it's like either I sell them now, cash out in a sense, and ready to buy, or I just hold on to them. It was one or the other, right? And then renovate and do the whole thing, right? Yeah. You got to spend about 30,000 per property. It's $60K next, right?
Not worth it.
It's not worth it. You unload it. One sold. I listed the original one at $590. I sold for $560.
No, it's awesome.
Okay, yeah. I'm okay with that.
But see,
and sold as is. Where is?
Yeah.
So like it needs all new windows, needs kitchen, flooring, fencing,
done.
The driveway, garage door,
goes out
ceramic tiles, everything. The basement carpet, like the whole house needs a gut.
No, it's gone.
I think it's
a good time. It's a good time to get rid of it.
For this client.
Hey man, 300% return in 4 years.
It's not
like
bad.
That's
You know what's the best is when you're dealing with the offer. You I was telling the sellers or the buyers coming in, the buyer's agent. He's like, "Hey man, do you think this?" I'm like, "Give me this number sold as is. This is the closing date. Send it. I don't even want to sign back. This is what I want. I don't even care. I don't want to negotiate. As long as it comes back, you know the house is what it is and done. There was, like even the attic had some stuff going on in there too, right? So
just tell them what it is.
Sold as is, where it is, via and gone.
Gone.
So it's good. Yeah.
No, it's good, man. Cool.
That's it. Yeah. So 2020 for me, I think, naturally we're going to have, I think it's just going to be flat. I think we went like this, then we came down. Now we're here. I think we're still going to see a little lull. I think a little one. They're going to drop. Yeah, I think so. I think it's going to be again. But it's all mixed signals because look in Kleinberg now. They had the new development launched. 3 builders launched the phase
recently?
4. Yeah, in Impressions Kleinberg. Dude, honestly, they were parked on the road.
Again?
Cops.
Right now?
Insane. Like,
come on, man.
They sold out.
No.
So I talked to
How are the prices?
So naturally, originally they were like a house, what they were selling for like a 34 detached was probably on the upper, let's say about 9, let's say upper, let's say like a 3-bedroom was probably 940 to 970, and like a 4-bedroom was probably into the $1,050,000 or something of that nature. Mid-8s. They sold.
Oh, okay.
Yeah. So line up like crazy, sold out. So there was three builders there. They sold 50, 50, and 40. So
see, Steve,
140 units.
I think that you may be right, and it also and I think you hit it right on the and I think the variable is going to be new construction. The variable is going to be new construction. I got an email from somebody that contacted me. They contacted me, and I said, okay, send me the details of what you purchased. They're going to be closing in May, like in the next, So in the next 30 days, they're going to be closing on a property that they've bought over here. Okay?
Inventory home, though?
No. So they bought it pre-construction back in like 2016 or 17 or something like that, right? I think it's 17.
How's the appraisal?
Yeah, it's going to be shit. Because the thing is that what ended up happening was he told me what he purchased the property for. And today, in today's market, that property will trade at $100,000 less. So maybe he has enough funds to back it up. But see, the thing is that he's like, I want to sell the property. Like, that's his approach to me is I want to sell the property. This is what I paid. This is what it is. And I have to have a conversation with him and say, well, I get it, but look at the comparable sales. Like, this is all new homes, and they've sold $100,000 less than what you paid. Yeah. So where's your profit? You know what I mean? So I think that's going to be a variable. I still feel like there are going to be people, and I'm not sure how big it's going to become, is that they're going to have a problem closing on their property. Yeah. I think back in like at the end of 16 and early 17, people were still in this craze of purchasing property because they thought it's never going to stop. Yeah. They assumed that they were going to get X amount of money for their property, and then the property that they were purchasing, they were going to stretch it because their property was going to continue to go up, and then by the time they closed, that this new property would have appreciated as well. So they stretched on their purchase price as well. Now that the house that they own right now has gone down, and the one that they've bought on paper actually went down instead of appreciating, it's going to be a big problem for certain people.
This is my fear of 17. In 2017, going into 18, was this debt load. And I'm starting to see now in my area. And you know what, so again, I'm selling things, I'm trying to cash out. I have a tingle in my gut. There's a gut feeling now. There's a lot of stuff that's not mentioned in the media, right? That we're seeing. Like I always say, we're like the canaries in the mine shaft, where we kind of see everything first. So there's one street in this new section of Kleinberg, and these were all sold for 2.3 to 2.5 million. Cookie cutter houses, 2.3 to 2.5 million. There's maybe 20 houses on this crescent, I would say, like a horseshoe style crescent, 22 houses, something like that. There's 11 or 12 of them that are see-throughs. They're up and nobody's there.
Wow. They're up.
Some, maybe 50% of those have loft boxes on, but are not on the market. Then there's like 5 of them that are listed. And I'm talking like a little horseshoe. It's in a big area like this. It's just a little section now where they have to close in these houses. So I drove through there. It was like I looked like I was like I was staking people's houses. I was like, stop! I'm like looking. This thing's vacant too. Like, what's going on? I remember that movie.
The Big Short?
The Big Short. Yeah. Remember where they couldn't understand the analytics, and they're saying, we got to go there. Like, this doesn't make sense. How's nobody, waving the red flag, and everyone's still going with this greed? So they sent people out door knocking in Miami and interviewing mortgage agents and stuff like that, and they saw like the whole platform. I feel like I'm those guys door knocking because you kind of see that, and it's a little scary, man. Like, I don't want to frighten anybody, but I feel like going back to that, if you have to upsize, you have to downsize. It's relevant. It's irrelevant because you're buying and selling the same market naturally. It's fine. But speculation, no. New construction, I have a little fear with it because you're kind of pigeon-toed to buying now and closing later, because these are still, there's just this is just sand. Soil.
There are
at least 18 months here to go.
Some of the properties, but see, even me looking at it as an investor perspective, there was those homes that I showed you too. I don't think that there's a week that goes by and I'm just like, I'm such an idiot.
With what?
Remember the ones I was showing you, like the back-to-back ones for 540? Like, I should have bought one, man. I hesitated, and it was just such a stupid decision on my part. Because I really understand the market of where I was at, and I'm just like, I feel like an idiot now, because it's like, for me, that's like a $60,000, like should have made it, right?
Yeah.
I think that there are some good deals. Like, I know, like, there will be, like, as builders start to need to move their inventory, I think you might get a good deal. But again, it's not for somebody to speculate and say in 1 year I can flip this property and it's going to be something good.
I'm just scared of the mortgage. Like, you still got to sell what you have in the current market. Like, so we just mentioned all the people got in trouble now. So you're locking in for a year or 2 years. Okay, so maybe I'm risk adverse. I don't know. I think I make moves when I need to. I just don't like being tied into something where I can't make a move.
So the way I look at it is, and let's just use that townhouse as an example. So they were selling it for 540, right? So I know that same house, if it was built up and ready today, would have traded at closer to 600. Like, I know that for a fact based on comparables, so that's okay, and whatever.
You're 10%.
Yeah, but the other thing also is that, see, even when I bought the other townhouse I have, like as the investment one, like even when I bought that, I didn't care. So like, my style of investment is different, right? So I didn't care. That property could go up or down or whatever. My idea was that I'm never going to sell this property.
Fair enough.
So if I had purchased that property, it would have been great that it would have gone up $60,000 by the time I closed, but I don't care. I'm not touching it.
Yeah.
Yeah. I'll have the ability to close it and I'll just hold it.
Yeah.
Yeah. So to me, it wouldn't have made a difference.
Number one, you're buying below market value. Yeah. Number one. Number two, I mean, fiscally or financially, you should be fine. So you can set money aside to close it regardless. Mortgage agents, you probably had a chat with them prior to that. Say, hey, bud, like, this is closing in 2 years. How far away is that project?
Yeah, it was about 15, 16 months away.
Sort of gauge what's happening. Maybe, I don't know, do they lock in rates for new construction?
You can, if you go through some of the larger banks and stuff like that, but being self-employed, that becomes tougher too.
Yeah, I don't know, man. Like, I see, even that just doesn't, I don't feel good about it. I don't know.
But I mean, like, and not to get into too many details.
When the market,
like, there's
so
ways.
Again, up, this, now I feel we're going to be here.
Yeah.
When we're going to, now let's reverse the cycle. When we start going here, new construction going to tap into like no one's business.
Yeah.
It's the easiest bloody investment ever. You put,
for sure.
20% down, what is it, 5% increments of 15 to 20% down over a year, spread over a year. And then you sit there. Your money's got to sit somewhere. You're not going to give it to CIBC to invest it. You're going to make less because they're going to minus their fees on it.
Yeah.
So you're going to stick your money in this, and you're going to watch it grow in a year. You take possession, you lease it out for another year, and then you sell it after that. It's the most simplest way to invest. But I don't feel like it now. No.
Yeah, like I said, certain things might still work, certain things might work, and then it depends on your time frame. Because if we talk about going into a lull, how long is the lull going to last? 20 years? No. 3 years? 2 years?
I don't know, man. I don't know. We don't know what's out there, right? We only get so much information. So we had that TD. Remember that TD chief economist was talking about unemployment rates being as low and Canadian jobs being resilient.
Yeah.
Didn't they just announce last week that something like, I don't know how many thousands of jobs are lost, 7,000 or 8,000 jobs are lost in March, just right after he spoke.
Yeah.
So, and I remember I was telling you, there's so many people in construction right now, especially in the low-rise sector, that are dead. Yeah. There's no work. So these guys are going to work sometimes 2-3 days a week going home. Remember, these are the guys that, not them specifically, but most of them, let's just say they bought houses in the height of the market and they're carrying a big mortgage banking on their future with construction. These guys are going home with half of what they normally made, and some of them, like literally 30 or 40% of it, because they're on EI, unemployment, right? Mm-hmm. So how are they going to afford these properties? So that's my fear. That's just the low-rise sector. But mind you, low-rise sector, now the good thing is the high-rise sector is still kicking really, really well, naturally, the condominiums. So a lot of these low-rise guys are trying to kick up into the high-rise sector and then lend a hand there to make some income. But what happens when this condo, so now that we're talking about, I was reading an article yesterday about the growing pains in Toronto where we're almost going to be, I forgot we're a top 5 in the world for amount of condos being built or something like that.
I think in North America, I read something. In North America, we have the most cranes in the sky right now.
Fair enough.
Yeah.
And still now, I think there's 60 buildings up, and there's another 40 to go, something like that. I have to read more of the article I read yesterday. But what they're like, basically what the article is telling us, are they overbuilding? You know what happens when they overbuild, right? It's one of those things.
I don't know.
Yeah.
Especially for a place like Toronto, I don't think they are. Everyone wants to be in Toronto.
New York overbuilt. It's a way bigger. We're like a speck to them.
This
Miami,
is what I'm
same
saying.
thing.
But,
LA, these are a lot bigger cities than us in a sense, right? And they all failed at one point.
Yeah.
New York was bankrupt in the 70s and 80s.
Yeah.
It was a bankrupt state. Imagine.
You see, it's all about timing, but it's all about timing, right? Like, and how are you going to get the perfect time? Like, and just like you said, nobody knows what's really going to come.
Just all I may be saying, just be cautious.
I would say the same thing. So even when we get into investments and stuff like that, like certain things that I talk about doing, like for me, I would say like I can hold it. Like whatever is going to happen, it doesn't matter to me what's going on around me. It doesn't matter because we have the ability to hold it. You know what I mean?
Because we're having these conversations now. Like we're trying to.
Don't get me wrong.
We're setting up.
Yeah,
right?
like don't get me wrong. It would hurt. Like mentally and financially, it would hurt. But the thing is, it wouldn't cripple you. Like if you did it smart, in a smart way, it wouldn't cripple you. You'd be like, shit, I should have listened to Steve. But like no, but
I could be wrong.
But who knows, right? Or the damn thing could go up 200K. Like I don't know. You don't know.
Yeah. No.
We don't know. So I would just say again, it's like investing is definitely a personalized thing. It's like decorating your house.
Yeah.
It's you got to do it your way and what you're comfortable with, right? Yeah. Like if I look at my father, like he wouldn't spend, he's scared to even put any money anywhere. Do you know what I mean? Like the way he would spend his money or keep his money is in a checking account, safe at the bank.
Yeah.
So that's his risk.
My dad's the same way.
Yeah,
that's that, the baby boomer mentality, a lot of them, right? But it's okay. Yeah, it's good conversation. At least, this is something, we're looking at all facets of the market, right? So the growth, the potential, but also let's not be ignorant that things can't fail because
they're gonna fail. Yeah. I don't think even what we saw and we're calling it a market downturn in 2017. No. That was nothing.
It's just a leap year.
That was nothing. I think that there is going to be a time where it comes down dramatically and we're going to get hurt in that process. So you got to be careful of what you're doing.
They always say consumer spending is going to start to give you an idea. So you talk about. We have a lot of friends in different industries, right? So let's talk about my buddy selling vehicles, like high-end vehicles, Mercedes in a sense. Sales are down there right across the board. This is a corporate store, man, in a great location. It's got nothing. It's not like it's mismanaged or it's like someone is cooking the books. It's just sales are down across. Mercedes had their overall review in North America. Sales are down. So what does that mean? People are not spending the money.
People are not spending the money, but then again, going back to that TD thing, and it really bothers me still to this point. Like people are.
That you wasted 2 hours?
That
you wasted 2 hours of your life?
I almost thought I did, but no. But some of the stuff that.
The debt load.
Yeah, debt thing. Like that's really scary, and one of the main reasons people are borrowing money is to fund lifestyle, right? Like I don't want to dig into that again, but it's just that thought itself is very scary. Yeah. That's a very scary thought that when you start borrowing money just to fund a lifestyle, that you need to make that Mercedes payment or something along those lines. Like, there was and it was for a debt consolidation company or whatever. I heard it on the radio. They said the average Canadian family is $200 away a month from insolvency.
Wow.
Like, are you serious, man? Yeah. Like, that's crazy.
Bankruptcies rates up 17% last quarter.
17%.
Insolvencies 35%. What's the difference between insolvencies and bankruptcies? So that's a good thing because to me it seems like it's the same bloody thing.
Yeah.
You're insolvent.
You can't pay your debt, but you're trying to manage. So
is that what that means?
I think, and I'm not sure. I haven't really had to look into it. But insolvency, I'm assuming is that you're going to do your debt consolidation and try to make payments and things like that.
Sell things off.
Bankruptcy is just like
you're done.
I take it.
Here's the keys.
Yeah, exactly.
So up 17%, and then that's 35%.
That's huge, man.
That's what I'm saying. That's why you start to read.
That's scary numbers.
You got to read all these, and then what did the chief economist said? They said that Canadians are carrying the most debt load in the last 10 years.
The most, and it's the most expensive to service In the last 10 years, debt is the most expensive to service right now. Be careful out there. Be careful out there. Bro. Stay in your lane. Yeah, look both ways before you cross that road, man. Yeah.
So going back to like, dude, when did you ever drink like Dom Perignon or all this? Like, never had like. Would you spend that?
I don't even think I've seen a bottle.
Yeah, fair enough. Yeah, I only see them in like cases when I view houses. But people are popping this stuff like crazy. I give you an example. Yesterday I went shopping. I go shopping like a groundhog once a year, you know. So I go. We're at Square One. I went with my son on Square One to go look at. We just walked through. There was Harry Rosen and stuff. I go, let me go to Harry Rosen. I haven't been here since I was like 20, in my 20s. I need a pair of jeans because I lost weight and everything. Everything's looking. I have to, whatever. So I go there. I go in the diesel section. I pick up a pair of jeans. $380 plus tax.
I would not pay it, bro.
Dude, I folded it back up very nicely, and I stacked it like nice. I'm like, told my son, let's get out of here. I would have
vomited, man.
I was like, how do you do that? Like, no. and I just sold $300,000 in equity, like coming, you know what I mean? Like a lot of money's coming home. It's not like the affordability is we can do it if we want. I went to Hugo Boss yesterday. I bought like 11 items for $1,000. I'm talking jeans, shirts, dress shirts, like. Spent the money, but 11 items. I think it's a better.
Yeah, no, it's way better.
And shoes too, like $500 shoes for like $170. Like, yeah.
I just can't do it. And just to hit on that video that I put out, right? Like that Sell It video, and it's like it looks ridiculous, right? So some of the stuff in there looks ridiculous. Popping champagne off a balcony.
Yeah.
I think literally the bottle of champagne was like.
But that was Spumante.
It was like $7. Yeah, it was like a $7 bottle.
So it was all foamy.
Yeah. It was like $7, man. And it's just like
sugar and water.
I don't know.
Gas.
Man.
Yeah. No, it's a different world.
I can't do it.
Cool. Price adjustments. You want to get into price adjustments?
Yeah, I think that's very important at this time.
Yeah, I think it's super important. I find it right now. Like I think. Price adjustments, like I was mentioning, is something that's necessary in order to sell a property.
Yeah.
You set your price, you feel the market, you gauge your showings, you gauge the feedback from the showings. Then you're looking at your current inventory that's on the market competing against you, and the current inventory selling off. So it's 4 factors basically, right? Naturally, and then I guess timing with the market. Let's say it's 5 factors. If you're sitting in the market for 14 to 21 days at the same price and you haven't received any offers and you had like 10 or 15 showings, there's only a clear indication. Number one, there's a few indications. The marketing's working because people are coming in to view the property. Number 2, the house is not stacking up to the price we're listing. Mm-hmm. So naturally, what are you going to do there? Adjust the price down, set it, because now we had the first 10 buyers come through, adjust the price, now we're going to set another 10 buyers coming through. And they're all going to be different agents because they're all at different price ranges. So you're going to have to set it. It's almost like fishing. You got to keep, going different fathoms in order to catch whatever you're looking to catch, right?
Yeah.
And if they're not biting, you got to lift it up a little higher.
100%. Like, and I agree with you in pricing. Yeah. I think the one little bit of difference I'm looking at right now is this. I think that if we had listed a property prior to this right now, and it's still overpriced in today's market, then you have a problem. But the thing is that if you're priced right now, and maybe even a bit more now in this market, like starting basically now, I think you'll be okay. But if you have something like I do, I have a property that it's a nice property. To me, like I know, of course, the sellers are emotionally involved, but I am a little bit too, just only because I'm looking at this property and I'm saying,
you see the value.
I'm seeing the value in it. I'm looking at other houses around it. I'm like, these houses suck. They're not selling either, but I'm like, these houses suck compared to where I'm at.
The other properties. So you're fine.
So that's the thing. So we did yesterday, we did a very slight price adjustment, repackaged the property, and it's going to go out today. So like it went out yesterday actually. So we should start to see some more traction on it now. I'm really hoping like within the next 2 weeks or so, we're having a different conversation about this property, and I think it's going to go. But pricing is key. And if you're in this market, and your house is not selling, this is a pricing issue. About price. It's a pricing issue.
I went on a price adjustment last night, and and you can feel this because we care about our clients. We're emotionally attached, even to. So when I list someone's house, I hope the clients understand this. It's like, this is my house now.
Yeah.
Like I've lived here since as long as you lived here. Like I'm gonna protect this thing. I'm gonna get you I'm gonna fight for you. This is our job, right? We can become emotionally attached to the product. So even when we talk to realtors or we talk to buyers, we're always on a defense, right? And trying to get them to try to provide value to the property.
See your vision of it.
Yeah. Fair enough. Like we're trying to and this is, and again going back to that. going for a price adjustment is going to be one of the most difficult parts of our jobs because, we set the price, it's not selling. Now it's like, okay, it's a reckoning. We have to adjust the price. We got to get more people in. But it's going to be, it's a tough conversation. You got to be a really good agent to go in there and show what's sold, what's currently available, where we should list that. Let's give it a go.
Yeah.
Like you said, reposition, repackage it, get it back on the market, and then we got to go for another go. And we can't look at who showed because who showed probably won't get back to us even with the price adjustment. No, because we mention it to them. Price is always negotiable. If you like the property, submit an offer. So it's naturally we got to keep our head down, always go forward, look for new blood. When we do a price adjustment, we're looking for new blood to capitalize.
Look, it's like we did the same thing yesterday. We have that emailing system or whatever, put together a nice little brochure and send it out to all the agents again that have seen it. Do you know what I mean? All the agents that seen it, we send it out to them. You know how many called us? Yeah.
Yeah,
0.
It's a dead
Just in case you got mistaken, it wasn't 3, it was 0.
It's Italian.
0.
Pasta.
Yeah,
no,
0.
So
it's done. So that's start finding new people.
100%.
Yeah, find new people.
Look at my investment property. The one I just sold firm, and I had 2 of them listed. So one I looked at it. I said, this has still got value, like you're saying now, compared to what's on the market. This has got value. I'm not touching the price. This one here now, there's properties on the street selling, fully renovated, and units. Mind you, it's back down to the train, but it's fully renovated, selling for, like $650. We're at $590. We need about like $30,000-$40,000 to upgrade. Plus, naturally, maybe more, maybe $50K.
Yeah.
Plus, we're a mid-unit.
Yeah.
Like
you're not going to compete.
I adjusted the price down just $10K. People were calling. I had shown maybe 20 showings.
Yeah.
I locked in with one lady. I said, listen, you get me X and we're done. I go, you're done. The house has to be sold as is because I'm not planning to fix anything. I'll sell it at a discounted rate, let's call it. But at the end, if you look at what we sold for, what was renovated on the street, we sold pretty well. Yeah, honestly.
But it's about going in and having a quick impact on it. Like sometimes people feel like they're on the market, they're going to find the right person. I don't think that's the case, man. The people that are in the market, they're looking right now. So the thing is, I feel like you got to go with the biggest impact and right away. Like you got to be priced right, look right, and you're going to be able to capitalize the most. You're gonna and then other people you'll see will follow suit. Like they're going to have to come down in price.
And it's better you do it before anyone else does because when they start adjusting price, like I don't say I trust. I don't have much faith in a lot of people in our industry because I'm just serious. Like there's a lot of good agents, but there's a lot of people that just going in for the quick buck. So these guys start adjusting prices too violently, and then they offset the whole flow of the market. Yeah. If everybody kind of comes down together gradually, boom, we're all gonna capitalize and we're gonna do our best for our sellers. Yeah. But you get that one party that just like convinces their sellers to just like drop your pants down and that's it, boom. And then what happens is this: their property was a good property, probably got more value than my property. Now we're offset because they got more value for a lot lower price. What do we do now? We have to go down to here. Yeah, it's just. But dude,
like we're talking about it, and I don't want to drill into too much, so I'll tell you quickly. But like Northeast Ajax, like I have a buyer there looking for a detached single car garage home there. There was a property that was listed at call it 620, sold at 640. But the thing is that this property was nice. It was 4 bedrooms, had a walkout basement. There's other properties that are selling for like that 635, 640 that don't even have a walkout basement. So essentially, everyone else in that pocket now is having a hard time selling that property.
And that's what I'm saying.
And they just came in and killed it.
And let me rephrase it. So that's the where I don't have faith, agent like that. I got to say, there's good agents in our industry. And we're kind of blessed with that too. But ultimately, that's a guy like that or a girl, whatever it is. An agent like that just, goes in, strong arms the seller and says, hey, this and that.
But sometimes I wouldn't even say it's like strong arming the seller. Sometimes I find the seller doesn't even know. Like we're involved, we assume people know things, but they don't know. Like there's been plenty of times I've gone into a house and I said, your house is worth X. And they're like, really? I was like, well, you seem insulted. They're like, no, that's a lot more than I thought. I was like, okay, but that's it.
Your area is better than mine. Every presentation, I had to refuse a few listings in the last couple of weeks now. It's just, we're not meeting on price, right? And I can't.
But look at my chart, right? Like Pickering still did well.
You're doing well, yeah.
Pickering still did well.
When you got those properties there that were selling brand new for $2.5 million, now they're selling for $1.8 million.
Yeah, that's a tough pill to swallow,
$700,000, man. So and now you're in that area. You're a seller in that area with a resale property. you have like 2,000 square feet less. You're at the height of the market. You're probably worth about 1,650. Now you're about 1,400 ish. Let's call it. You know, and you get in there and they feel that the value is still exactly 2017, but it's 2 years later.
Emotional. It's emotional.
2 years later.
You know, that's the other thing that gets messed up with pricing with people. It's emotional too, right? Like the
totally emotional.
You know, one line is that, but I need to get this amount.
Yeah.
I understand you need to get this amount, but like it's just not going to happen. Like in terms of like what's trading around us, like, you know, you could be listed at, you know, $800,000, but everything around you sells at $750. Yeah. It's like, what are you going to do? 10, like I know you want it. Yeah. I want to get it for you too.
Yeah. Naturally, it works, you know.
But it's just not there.
It's not there. Yeah. So what do you do? How do you take that listing? Do you just be transparent, let them know about it, and then if they make a decision, you know?
I would, like in my situation, I think I would still take it because that's what they want. But as long as they know 100% going in is that this is the price I stand at and this is what I think the property is, and to a certain point, and being straight up is like, don't give me grief along the way. Do you know what I mean? Like, I'm telling you what it is. We'll still do everything, but it's like,
what's your threshold percentage-wise?
You know, like I would say somewhere in that, you know, 5 to 7% range, yeah. So somewhere in that 5 to 7% range, I'll take it. Anything beyond that, it starts to become a little bit ridiculous, right? Yeah, like I don't think you're interested in it at that time. There's a lot of bad things that happen once you start taking overpriced properties. Yeah.
It becomes a breakdown of relationship between you and the sellers.
Sure.
Like, you know, I don't have many expired listings per year, but
neither do I.
Yeah, and you don't either.
I don't either, no.
So it's, I think if
I can count them in my career, how many I've had.
I think I've had, same here. Yeah. So I had one, I remember it was like, you know, we went into the presentation, very upscale neighborhood in Vaughan, like National Golf Course. It's a $200,000 membership.
Wow.
Like, this is
huge.
Anyway, so the house was there, and I get in, and the guy, you know, rages at me. He's like, I want to list it here. I'm going to pay you X, and I want to only contract this long. So, I don't know, we signed everything. I called him like 45 minutes later. Like, you know what, I got to be honest. I can't get you. Like I told you in the presentation what I could get you for the property. This is what my rate is. And this is the length of the contract. I said, due to the property. I said, I apologize. I said, you know what, I made a mistake. I definitely, I don't think we can work together. I'd rather let you, you know, tell you now the truth rather than let you down later. I said, so, you know, take the listing. And this is like really upscale area. And, call me back, and he says, I think you're crazy. He goes, why don't you take the list? I go, I feel like I can't provide what you want. I said, I'd rather just, you know, tell you now than let you down later. Okay, fair enough. That's okay. Yeah, thank you for letting me know. So it's all the time. So like 3 weeks later, he calls me back, and we get listed. But I already mentioned, so I got the commission that I wanted, the length of the period, but the price was still there. I said, but we got to adjust it down when we get an opportunity. Wouldn't adjust it down. We get an offer at 2.3. We're talking in 2014.
Wow.
Like 2015.
Yeah, wow.
Like, you know, that's like 3 million plus. Gave him an offer at 2.3. We're listed at 2.5. Won't take it. The house wasn't in good shape either. It was just the land, the value of it, basically. Sells it in 17 for like 2.9 million.
Wow.
Yeah, but it's 20% of think about the years. So 2.3 was exactly what he sold for, value currency wise.
Yeah, same thing.
So if he had 2.3 in 2015. Or 2014, 2015. Let's say 2014. If he had that 2.3 million, well, how much more things could he have bought?
Yeah.
Then you sell it for 2.9 and.
But this
anyway, so that was an expired listing. And I remember it was the relationship was never the same. And I didn't want the bloody listing to begin with. It was sort of like call me back and
convince you to take it,
to come back into it because it was on my terms and where we agreed with price, right, and doing adjustments on price.
But let's see what happens. Like even I'll tell you that one other one. Remember that other property I took for like 1.5 million, and like within 30 days, like the guy was giving me a lot of grief and whatever else like that. And I got him an offer on the property already, and then he still wouldn't cooperate with me. And I just basically told him like, listen, like we gotta go our own ways or whatever. So he relisted the property back at. So we had it at 1.5 basically. It's listed at 1.4 right now, and it went sold conditionally in like. A couple, like maybe
price
2 weeks.
Originally.
Yeah, originally what I told him. And we had an offer for like, we had an offer at 1.3. The guy was agreeing to go to like 1.36, 1.35 is what the buyer would have came up to. Now I'm just curious to see what it sells for. So this was back in last year August, and now we're in April. So let's see. Let's see what this property ultimately sells for.
You know what's funny? So now we're talking about price. How about if you listed it closer to where you wanted to go originally? You said the sale was going to be where?
Like I told him that we should be somewhere in that 1.4 range, but I said we could go slightly higher than that 1.4, but like we should be in that 1.4 range.
If you listed it at 1.429 or 1.39, how much better would his life have been?
It would
save
yeah.
6 months.
And we're talking property tax on that place.
It's vacant too, right?
Yeah, it's vacant, holding costs, everything else like that. He must have had like another 20 grand go into it. At least 20 grand go into the property.
Oh, minimum.
Minimum 20 grand.
Property tax up here.
The property tax.
Yeah,
the property tax was like 5 grand, and to carry it for 6 months, he probably wasn't. Yeah, minimum
50 grand, 40 grand.
Minimum, he's in for 25, 30,000.
You're going to carry that. I'm sure that property's fully mortgaged. I would imagine.
Pretty sure so, a lot of it is. I'm sure.
Investment.
Yeah.
So let's say $1 million is invested, so $1 million is what, 7,000.
It's crazy.
7,000 a month
crazy.
to carry.
It's crazy.
So it's about 40, 45 grand.
Yeah.
Yeah.
I don't know.
You did
pricing.
Your job.
Hey man, and you know what?
And you give it back.
And I gave it back to him too.
Good for you,
and I just said like, this is not going to happen.
Yeah.
Yeah. And he had to list it with somebody else for a long time after that too. Yeah. Can't help you, man. Pricing. It's all about pricing.
Could have been out 6 months earlier.
We can
more money.
we can help negotiate a great deal and have a really great presentation. But pricing is key.
Pricing is key.
Yeah.
Yeah. I think even people get confused with marketing. There's so much we have tools to market. We have naturally MLSrealtor.ca is going to be
it's going to be massive.
Tool.
Yeah.
Then you got all the sites that piggyback on our sites like Zolo and all those other things that re-advertise the property. Fair enough. Then we have, or just listed flyers. Then it's, if you want to send letters out to the street, then it's, send it all to your
social
buyers,
media,
platforms, different handles, your YouTube. You do your videos. You're going to do a few open houses. What more can you do?
Yeah, that's it.
It's exposed.
Yeah, it's exposed.
Just Realtor.ca is the is the key to
it's massive. Yeah, that's massive. Yeah. So marketing and positioning is very important, but I think that what our value really comes down to is like very much negotiating the transaction for them, making sure everything stays together and negotiating the transaction.
Clear, concise. When the lead is there, how to execute the lead, how to get them to pay for it. Because nobody really understands how much conversations we have.
There's a lot,
especially in today's market. I'm still talking with an agent that gave us an offer 40 days ago. Feels like Lent.
Yeah.
So if I show you the log, dude, you'll die. Even yesterday.
Still
40 days.
Yeah.
So it's a constant constant communication with leads.
Yeah.
He's there, like the offer's there, right?
Yeah.
And it's just a matter of getting the parties to agree with it.
Yeah. No, it's true. Cool.
So, ready to sign off, buddy?
Yes, sir. All right, guys. This was East Meets West with Steve Zalunardo and Hussein Kabani. If you guys have any questions, comments, want us to cover something in our next podcast, get a hold of us.
Absolutely.
Yeah.
Awesome, guys. Have an amazing day. And if you have any questions, for sure, direct message us.
Cool. Awesome. Take care. Cheers.
Ciao.